The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taking a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 23rd terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should never, ever be prisoners of our past, but instead pioneers of our future. So let's you and I do everything in our power to be pioneers of our day. You know, pioneers like Lewis and Clark or the Wright brothers. Hey, speaking of the Wright brothers, is this market flying or what? Hey, you know, as we begin our day, we should always remember that everything and everyone around us is our teacher. That's right, our teachers are everywhere. Our lives are set up to teach us what it is that we need to learn. We, you and I, we possess this extraordinary inner wisdom that shows us who our teachers are and what they have to teach us. Hey, look, my outcome each day is to give and to give and to give. And in that giving, I hope to share with you some of my teachings. After all, a relationship is where you go to give something, not get something. And each day, I give you all that I've got. So let's remember that what we see in others is often a reflection of ourselves. And what I see in you is a great teacher. So go ahead. Give me a call at 877-927-6648 internationally. You can reach out to me at 727-445-1044. And together, we can share with tigers and tigresses around the world. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're trading up 134 points, trading out at 16,558. S&P futures up 14.5. They're trading out at 1939. NASDAQ up 30, trading at 39.79. Russell 2000 up about 9 points, trading at 11.04. I wish I had been around my computer system yesterday afternoon at about 4 o'clock. I would have posted something in the den that would have assisted any of you that traded the futures marketplace. And what is it? Because I've shared this with you on a number of occasions. What do you think is the one thing that I could have shared with you yesterday that would have assisted you in some overnight trading? Is it a surprise? Let me give you a little morsel, a little tidbit here, a little hint. Is it a surprise to you that the futures are up this morning? And if it's not a surprise, why? I have shared this lesson so many times, and this is based on going back and doing the work and doing the work and doing the work since the VIX index began. And when the VIX index has a one-day rate of change in excess of 10%, and oh yes, yesterday it was up $1.79. It was up 11.13%. Look, since the lows in 2009, it's like an 80% chance that within 2 trading sessions, and it's usually the very next trading session, you're going to see a market that's going to move higher. And what do we have this morning? So is it any surprise? Any surprise. Should not be any surprise. Tuck that one, folks, in your arsenal out there, because that one works. Now, if you go back over the history of the VIX index, it's 70% of the time. Within 2 trading sessions, you're going to see a market that is going to move higher. So it should be no surprise to us that that is, in fact, what it is that we've got going on inside of the market. If we go take a look at now, hey, one other thing, I got a number of emails from folks, people saying, how can I be so sure that the market has put in that major bottom? You know, and the answer to that question is I can't be sure. What I can be sure of is as the market was moving down, you know that I was saying this market is going to make a major bottom. Now, look, it's not like I'm pulling a rabbit out of my hat. Let's go take a look at the S&P 500. Forget about what the markets are doing right now. We'll come back to them. But it's more important for you to understand what it is that at least I believe is going on inside the marketplace. What I believe the charts are communicating to us, what is going on inside the market. So for the market to make a bottom in the month of October, is that unusual? Look. Let's just go back and take a look at the last significant bottom in the market. The last significant bottom that took place on October 9th, 2013. October 9th, 2013. When did our bottom come in? When did that hammer form inside the S&P? October the 15th. Nearly almost exactly a year later out there. Significant bottom inside the market on October 2013. If we squish this together just a little bit, you tell me in taking a look at these 2 bottoms, which one to you looks more powerful? The one that we just had or the one back in October of 2013? Yeah, you got it. It was the one that just took place. The one that just took place is the one that is most powerful. And I can tell you, if these markets do, in fact, move up between today and Monday, doesn't mean if it pulls back today, the markets will do something. I'll share with you if it actually occurs on Monday. It's only occurred 3 times since 1990. So one might say it's not a sample size, but quite frankly, it's taking a look at every single day of the year out here. Something will have occurred that has marked major significant bottoms inside the marketplace. So we need to wrap our heads around that one. Hasn't occurred just yet. And we need to see quite a few more net advancing issues inside of the New York Stock Exchange, but it doesn't have to take place today. It didn't have to take place yesterday. It doesn't even have to take place tomorrow. It just needs to be able to take place here by, I think it's Tuesday. I got to look it up. Monday or Tuesday. To be exact. Hey, if we go back a little bit further and we take a look at type of October type lows, remember moving into the favorable seasonal cycle, that ends in just a few days, basically, at the end of October as we come into Halloween. Now, the market back in 2012, it made its lows November 16th, right? Major bottom. Is there a possibility that the market goes down and makes low into November? No, I don't think so. I think that major bottom is in as we speak right now. Oh, you're not seeing my chart? I need to repost? Oh, son of a gun. Well, let me do that because I want to make sure that you guys are able to see my charts out here. So let me repost that, and I'll go back and show it to you because if you're not seeing it, that's not a good thing. Seeing 2 different charts. That's impossible. You should have one up right now, and you should be seeing my cursor moving around. Give me the thumbs up there, Alakazam. I'm not getting any thumbs up. Well, you go back and apply it to your chart. What you'll see is, the major low, the major inflection point came in November 2016. You had kind of that nice little V-shaped bottom that had formed back then. Hey, there were no believers back in November. And back in November, on November 16th, the signal was the key reversal session that took place on November 16th. We got nice hammer candles on a daily, on a weekly inside the S&P 500. If we go back a little bit further, okay, let's go back into 2011. When did the bottom come in 2011? Remember, the world was coming to an end back then. The euro was falling apart. Heck, they were calling for the euro to go back to par back then. We could probably go back and play all kinds of recordings at CNBC and things of that sort. If you go back and you take a look, when did the low come in 2011? Yeah, you got it. October 4th, 2011. Is it really that hard for me to have made a call that the market was going to be making a significant bottom in October? Nah, not really. Was this the only tool that I used? Absolutely not. Not even close. But Are there any coincidences in life? I just figured, hey, after getting a number of these emails, I said, let me just go out and let's just take a look at the charts. Let's just look at let's just tune out the noise that's in the marketplace. Let's go take a look at other significant rallies in the, Santa Claus rallies. If we come back and we take a look in 2010, you're going to see there was bottoms that were made back in August. August shot up into November, pulled back just slightly back into the November 22nd-ish type time frame. Then it was off to the races out here. That was in 2010. Well, shoot, what about 2009? Well, son of a gun. The market after making that significant low in March of 2009, we saw a little bit of a pullback into October the 2nd of 2009, significant lows. So during the unfavorable seasonal cycle, I guess the point that I just simply want to make that the charts are making to both you and I. You know what? Let's just go back and take a look at 2008. Let's not stop. And if you take a look at 2008, during the crash of crashes that were out there, the market made a short-term bottom, October 27th, 2008. Actually, the low really came. There was a low that came in on October 10th, 2008. It was tested, rejected, and then we just saw a little bit of a bounce out there. That was during the worst of times. Do you really think that as we take a look at stock chart patterns, that as we speak right now, that we are anywhere near the worst of times out here? We most certainly are not near the worst of times. So I do believe that if we take a look at the S&P right here, but the S&P, if it can crack that 2,000 area, if it can take out the high, well, let me put this on my chart out here, my data window. There we go. If it can take out the high of 2019, at a minimum, price is going to go revisit that level. I think it's going to move beyond that level. And if we take a look at a monthly chart, what does that say that we're headed to? It says we're headed to 2213. Remember, the actual consolidation pattern inside of the S&P is 2350. 2350, my friends. That is where the market eventually wants to head to. When are we going to get there? That I can't be certain of. But what I can tell you is if you go back, and you can keep going back further and further and further, you're going to find that major lows are made in the marketplace in the month of October. Will that be the case this time? Here's the deal. I really can't tell you whether it is or it isn't. What I can tell you is the market made a Gartley buy pattern. The third one since the lows in 2012. They don't come along that often, especially on this huge move, this huge bull market that we've been in inside of the S&P 500. They made a Gartley buy. They did it with a beautiful weekly and daily hammer candle out there. In the trade, the investment becomes pretty easy. The signals couldn't get any clearer out here. If you take out the low of last week, 1820.66, well, then Santa has something else in store for us. Maybe it's coal, but maybe it's not. But what we know as we speak right now, it most certainly is not. Right now, we got Dow futures. They're trading up, what is the number here? They're trading up about 130 points or so, 129 to be exact. Goldilocks, what's going on with Goldilocks? Off $11, trading at $12.34, right into a support level. Silver down 9 pennies at $17.13. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at the NASDAQ futures out here. The NQ trading out at 39.81. What do we know about it? Just like all of the markets out there, they all made the Gartley buy patterns out there. They all confirm with nice bullish reversal signals out there. Remember, in a Gartley pattern, you've got to have an A to B equals C. You don't need to have any of the Fibonacci numbers that are associated with them. And speaking of A to B equals CD patterns, a week from yesterday, Wednesday, at 4:30 in the afternoon, I'm doing a subscriber workshop for subscribers of eSignal, but we have made it available to all of our TFNN listeners. Now, the way that you would get access to that would be to go to the homepage at TFNN.com, and under Breaking News, you'll see this says a free workshop with Steve Rhodes. Click on that. You'll get all the details. You can check that out. A great overview of the A to B equals CD pattern out here. Now, let's take a look at the NASDAQ. And let me go ahead and delete the pattern off here. Let's take a look at retracements. What do we know about the NASDAQ? Well, number one, we know we've got the Gartley buy pattern. Number two, we know that we're above the daily market profiles. That's a daily chart that we're looking at. So that's a resistance level. That's at 39.0225. Hey, any pullback that comes back and tests 39.0225 and holds, that's your next potential buy point out there. If we take a look at retracements are a wonderful thing. They're a great guide to help us understand where the market has moved to. Well, what we know about the NASDAQ, it's trading above the 0.618 retracement retracement level. Yesterday was a day off. A day off, meaning it just simply gave some folks to actually get off of the elevator on the way up. And yes, with regard to the next floor, it's on its way to that next floor. That's the suite 0.786 level. That is 4,025.71. Now, what could get in the way of getting up to 4,025.71? Well, one could say it could be its trend. If we take a look at the trend out here, this is the trend for the NASDAQ. The blue diagonal lines that you're looking at on my screen out here. The blue diagonal lines, in essence, are about as close as I can come to as to the trend. If you take a look at what's interesting about this is if you take a look at where price stopped yesterday, dead in its tracks, right at the top of the trend. Now, the trend and the channel lines that I'm using have nothing to do with yesterday's highs, because as you know, what we're using is we're using the body of the candle. Doesn't matter whether it's an open or a closed. We're looking at the body of the candle to help us identify that. And we're looking for 3. If we can find 3, that's a beautiful thing. 3 helps us to identify solid lines out there. Well, if you take a look at the trading session, the open from October the 9th, you'd use that session. You could use the close on September 24th, and you could use the open on September 19th, the body of the candle where the NQ is headed to, the actual highs. And then when it takes that out, then what we're going to see is this Gartley pattern is going to go on, and it's going to go ahead and make its 5th outcome. There are 5 outcomes of every Gartley pattern. The 0.382 retracement, well, we're well above that. The 0.618 retracement, we hit that a couple days ago. The 0.786, that's the next stop where it will go ahead and let off some of the travelers. And then it goes up and it makes that 100% move of a move by getting up to that September 19th high. And then, and only then, when it takes out that high, and oh, it will take out that high as we move into the end of the year. Will it do it overnight? No. But it'll take it out, and then you'll have an A to B equals CD to the upside. You may say, well, where would that take us to? Well, it's a doozy if we take a look at the NQ, because the only swing point that you could really use for your A to B equals CD pattern, that takes us all the way down here to April the 15th. That's your A point. Your B point is September the 19th. Your C point was that low of that Morningstar pattern that took place on October the 16th, 1-to-1. A to B equals CD. That's going to take you to 43.98. 43.98. You're at 39.79 as we speak right now. I can make the case that before the end of the year, before December 31st, we might be looking at 45.92 out there, because this has been a powerful move. But, however, you could expect price to run into some resistance right here, right now. And that right here, right now says that price maybe pulls back into that unfair high, that 39.03 out there. So be looking for buy points. So I just suggest to you, you go back, you take a look at the stock charts, you go take a look at October-type lows that are out there, you go take a look at these significant patterns, these significant V-shaped patterns out there, and then you block out all of the news, all of the fear. After all, trading is about one thing and one thing only, and it's no different than life. It's about fear. You answer the question for me. When somebody is selling, why are they selling? It's because they are afraid that it's the fear that price is not going to go up. And the person that's buying, they're buying fear. They are buying that fear. They're believing prices are not going to go down, and it's time to jump on board. It's all about fear. The only thing that really sent the market moving lower yesterday was fear. You know, that nasty, nasty stuff that goes on in the world. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. He got the Dow up 178 points. Trading out at 16,638. S&P up 19, trading at 1946. Composite up 42 points at 44.25. Russell 2000 up 11, trading at 11.07. The DAX up 25. The FTSE struggling this morning. She's down 6 points. Goldilocks struggling as well, up $11, trading out at 12.34. Silver off 6 pennies. Light sweet crude up 74 cents, trading out at 81.24. Leading the charge to the upside, it's Tractor Supply up $10, up 17%. Out with earnings after the bell, trading out at 71.60 or so. Alexion Pharmaceuticals up $8, trading at 182. 181 and change. Parker Hannifin up 7%, up 750. Netflix up $5. 3M Company up 5 as well. Service Now up 9%. Brookfield Residential Properties up 21%, up $4. To the downside, Yelp. It's off 14%. down nearly $10, trading out at 60.33. Air Methods Corp off $7, down 14%. Precision Cast Parts, PCP, off 3.5%, off $8. Cabela's down 10%, off $6. Citrix Systems off 4.5%, down $2.85. Under Armour under the weather this morning. She's off $3 and change. Royal Caribbean Cruises running into a wave, down 4.5%, off $2.90. Dow's up $2.04 as we speak right now. Now, here's a key thing for us to be watching. If we take a look at the 120-minute chart out here, let me see if we take out the high. No, not just yet. If we do, a little H will show up on my system out here. That way I know we've gone beyond that seventh wave to the upside. What we do have inside the ES Mini. So the bears still have a little bit of a chance for the market to maybe give them just a tad of a reprieve with the market moving back and doing a little bit of a retracement out here. However, that will we can throw that one down the drain if, in fact, the ES Mini takes out the high of 1943.75. So all they need to do is get to 1944. You've got a number of different patterns up here. One, you've got one of my Stevie price relative strength divergent patterns that has been confirmed. That high has not been taken out. You got Basil's seventh wave up, so you've got letter G on the 120-minute chart. That has not been taken out. You've got a TAS market profile that went ahead and produced itself at about 10 o'clock last night. That's at the 1943.25 level. So there's our pièce de résistance line out there, but you get to that 1944, I think is the number, and then it just basically says, hey, the heck with you. The retracement was yesterday going into the close out there. I couldn't have given you more signals when I gave you that VIX reading above greater than 10% one-day rate of change out there. So at this stage here, it's still game on between the bulls and the bears as far as I'm concerned. Yes, what I gave you this morning is the longer-term outlook, what was really taking place, the significant bottom that had formed out there. As you know, I've also said we could see a bit of a retracement out here, and that's really what the charts are saying. To me, it's not really so much my opinion. I know that sometimes people think that what I'm sharing with you is my opinion. It is my opinion about the charts and the patterns that are out there. That's all that I'm doing. I'm just reading the tea leaves the way that the charts want us to go ahead and read them. Let's go take a look at some of these things that are popping and dropping. Let's go take a look at Goldilocks. What is Goldilocks doing? Being down $10 here with the U.S. dollar index up only 6 pennies. Well, let's go take a look at Goldilocks. Let's go see what it's doing at the 1234.90 level up here. I know there's a lot of naysayers, people that just do not believe that gold has formed a bottom, but it has, and all it's doing right now is just a bit of a retracement. Let me see if I can go ahead and put our TAS boxes back on here. Let's go take a look. Oh, look at that. How about that? It came right down to the level of support that it should have, which is the 1232.20 level. Let's see. What did it actually get down to? 1232.40. How the heck does that work? That's the area where you've got the largest congestion of buyers and sellers at 1232.20. Got down to 1232.40. Does it mean that price stops there? No, not necessarily. It could even pull back to 1218. But this 1232 level should be a good area of support. In fact, if that's the level of support, and then we see price go take out the October 21st high of 1255.60, you want to talk about A to B equals CD patterns, that will be a doozy. That'll go ahead and take Goldilocks up into the 13.12 level out there. That means let's go check and see what's going on in Euro land out here. The Euro up about a couple of pips here. Not doing a ton this morning, but let's pull this back. What has the Euro done? Well, the Euro, if we come from its low out here, trading session was on October the 3rd, I believe. Yeah, October the 3rd, down at the 1.25 level. That's your A point, in essence, of an A to B equals CD to the upside. The B point was a trading session on October 15th, and from that high, what we have seen is a 0.618 retracement. The actual 0.618 retracement is 1.26477. You're sitting out right now at 1.26498. It looks to me like the C point of an A to B equals CD may have formed inside of the Euro. What does that mean? That means if the Euro moves higher, the U.S. dollar index begins to move lower. Of course, there's more than just one currency pair that is inside the index. I've got a question inside our Tigers Den, so let's go check it out. The question is, how would I handle CPQ if I was long out here? So let's go check into CPQ. Let's first go see what it is. Let's go see. And the question, I would ask the question. I would answer the question with a question, which would be, CPQ, CQP. Maybe I just was a little dyslexic. Dyslexic is actually pretty good. Thank you there, Peak D. Oh, so that's Cheniere Energy out here. Man, what a move off of its lows out there. Let me try to back this up. Well, you were moving into it with 3.9 million. So 3.9 moving into 5.8. So you're moving up into that level with lightish type volume. I would say that you probably the most you're going to get out of this equity is around 33.15 to about the 34.60 level. It doesn't look bad. Doesn't mean that it can't move higher than that. In fact, if you can move into that swing point with some volume out there, that would be a positive thing on a daily basis. Let's go see what the swing point volume is out there. So let's go take a look at it. The swing point volume is June 2nd, 483,000 shares out there. A couple days ago, 192, 821. 821,000 shares on October 20th. So I would just simply say that mark the June 2nd candle. If you're moving in there with more than 483, you ought to get 34.60. If you can get above 34.60 with volume out there, then you got a large A to B equals CD to the upside. I hope that helps out Peak D in our Tigers Den out here. Let's go take a look at some other things that are moving and grooving in the marketplace out here. Let's go take a look at O'Reilly Automotive, ORLY, up 6%, up $9 and change. Let me take a look at that. That was a brief pause. That was called a swig of water pause out there. O'Reilly Automotive, talk about a couple of signs of strength out here. Today being one of them. You had one nice sign of strength out here back on February 6, 2014. If we take a look at that, now here's where gap is your friend. Remember, the expression that gaps get filled is the exact same expression. See, it's always how you say something, isn't it? Remember I mentioned fear out there. And so, there's the expression that gaps get filled. Now, gaps get filled is no different than buying a breakout. Because you see, the bottom of the breakout is the bottom of the gap out there. So you're actually looking for gaps to get filled. When those gaps don't get filled and price just comes back to the bottom of the gap, you tell me, would that tell you that you've got an even stronger move that's likely in the marketplace? And the answer to that is yes. So gaps are absolutely your friend out here. In the case of O'Reilly Automotive, moves up with 2.7 million shares out there, right? Comes back to test that gap with 588, with 531, with 963, with 594, with 577. Comes back to test the we'll call it the top of the gap, meaning the low of the February 6th candle with light volume. Today, you're gapping up and you've got volume of 239,000 shares, taking out yesterday's high of 11, with that had 1.1 million shares out here. So O'Reilly Automotive back on the move. Let's take a look at a weekly chart for O'Reilly, maybe come up with a to B equals CD pattern that this is producing. Oh man, this has done nothing but make A to B equals CD patterns to the upside out here. So let's just take a look at a small one. The small one coming off this little hammer candle back here in December 2013. That's going to be our A point out here. Our B point's going to be on February 17th, 2014, 2.3 million shares out there. You've already done 3.2 million shares this week, so you're taking out that B point with volume. 1-to-1 A to B equals CD. This says this equity is going to run to the 176 to 186 area. Right now trading at 167. So all points look good for O'Reilly Automotive. Let's go take a look at something that is moving to the downside out here. We got Core Laboratories. CLB is the ticker symbol out here. It's down $16 off 11.5% this morning. Here you've got a gap to the downside, right? So the idea is if gaps get filled, let's just take a look at the other side of the gap, right? Let's talk about weakness, right? We just took a look at when gaps hold, that they are your friend, and they show you about strength. Well, when you have gaps to the downside, they show you about weakness out here. In this equity, This gap down the week of May 12th does 8.6 million shares. So far this week, you're doing 2 million shares. Price tries to get back up into the 169.84 level. Can't. June 30th is the highest high that it got to, which was up at 168.40. 1.6 million shares going against 8.6 million shares out there, moving down. Now you've got now you probably have a confirmed A to B equals C to the downside, and it's a doozy out here. That confirmed A to B equals C to the downside. Oops, I didn't mean to do that. I probably had set it to $92. There are no coincidences in life. Let's go take a look at that A to B equals CD pattern out here. The A point up here on April the 14th. The B point down on July 28th. The C, come on, do it, work for me. And then the C point, Lord, yes, I got a little bit of slowness in the system here this morning. Not really sure why it's not cooperating. Come on. There you go. There's your A point. Here's your B point back there at July 28th. Your C point out here. That takes us into the high of September the 1st. Uno to uno, A to B equals CD, says this equity probably headed to 77.86. And down at that level, that gets you below the November 2012 area. But it looks like that's where Core Laboratories is likely headed to. Let's go take a look at, let me see, percentage-wise. Let's take a look. We'll go back and forth. Let's stay on this side here. So percentage-wise, Proto Labs is the big percentage loser out here of the morning. It's down 20%. And if we take a look at Proto Labs, it looks like they reported record revenue out there, but they must still have, even with record revenue, they still must have misguidance out here. Let's put this, so what is this doing right now? This is taking out a swing point from a weekly standpoint. That swing point, or it's trying to, that's the swing from April 28, 2.8 million shares. You've done 1.5 for the week as we speak right now. It looks like Proto Labs probably headed to this high volume bar from February 11th out there, 6.5 million shares, and that's a price range of 41.08 to 53.91. She's trading at 55.06 as we speak right now. Let's go take a look at Tractor Supply. TSCO is a ticker symbol. Up a nice 15%, up a nice $9 and change. This too is a weekly chart out here. Nice, strong looking move going on this week. Going into this little, may find a little bit of resistance where there was some volume off the highs at about 74.91. She's trading at 70.55 as we speak. This is Steve Rhodes. This is TFNN. It is Terrific Thursday.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 188, S&P up 17, Composite up 43 points, Russell up 9 points out here. Let's go back, take a look at both the Dow and the ES Mini, the Dow, the NASDAQ and the ES Mini. When we began the show, we were taking a look at that descending price channel here for the NASDAQ. You can see right now it is rearing its head. It's a daily chart, so the day's not over out here, but it is trying to break through that level out there, that descending price channel. That will be a significant change in trend in the marketplace. Of course, the ultimate outcome is you get above it, you come back, you test it, and then you reject that area, and then you're back off to the races, and that sends you off into the September 19th high out there. That was the daily chart. If we take a look at the ES Mini, the same thing. I don't think I showed this chart to you, but if we take a look at it, here's its descending price channel. We can see that price held yesterday. The day's not over just yet, but price again is trying to break out of that descending price channel out there. This has been an extremely strong move, this first leg up inside of the market out here. So this is something. If you look, it doesn't matter to me which side of the trade you're on. What only matters to me is that you use stops, because if you use stops, they get taken out. You can live to play this game another day, and that's really what it's all about out there. That was the daily chart. If we take a look at the 5-hour energies chart, that's sponsored to us by our man Saratoga Bob in the Tiger's Den out here. If we take a look at it, what we can see at real key level. We took a look, I think, on the 120-minute time frame chart out here, and it's really the same pattern in essence to a certain extent. It's not the same pattern, but if we do take a look, we got the descending price channel. Price did break above that in the 5-hour chart out here, albeit slightly. The key really is getting above that level. This is the ES Mini. You see a break, you get to 1944. That's all you got to do is get to 1944. Then the low that came in yesterday is likely the low that we're going to see. Not much of a retracement, that is for sure out here. And subject to some kind of scary thing going on with some kind of terrorist act, or because it seems like those are the only things that get this market moving lower, right? You got Ebola, and you've got ISIS, and you got terrorism or something like that. But otherwise, those actually presented buying opportunities out there. Nothing but fear. And so what we want to do is we want to learn to buy fear out here and have no fear. This market is moving higher through the end of the year out there. Now, I can easily make the case, I'm still in this camp, that we see a high or low that takes place between now and Tuesday. But that's a timing model that could be off by a few days. And yesterday could have been that level. We'll watch to see how these patterns here play out on these intraday charts. Those are the ones that probably give us the best feel as to what's going on inside of the marketplace. If we take a look at just a couple more things here before we go off of the air, let me see. What else do we have moving out here? Parker Hannifin, PH, is the ticker symbol. That's up a nice $7, up a nice 6% out here. Let's take a look at its a daily chart. Now, this ran on the weekly charts, run into resistance here this morning, 118.92. That's your TAS market profile high out there, so clearing that would be nice and bullish for it. Let's look at this on a daily chart. Was there a gap up this morning? Yeah, there was. And volume behind it, 524,000 shares. Nothing necessarily to get too excited about when it comes to Parker Hannifin out here. So I'd have to say on the weekly chart, that resistance level is a pretty decent resistance area. Also to the downside, I guess we didn't take a look at Yelp, did we? We'll have to take a look at Yelp during the next hour. It has gapped down and broken a swing point, a B point of an A to B equals CD to the downside, and that was the trading session from October 13th. Only 4 million shares there. You've done 5.6 as we speak right now. So, folks, it is Terrific Thursday. As always, thanks so much for joining us here. Remember, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks for being a part of the TFNN family. Have a great day, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.